You talk about some of the big underlying forces and what they're doing, and some of those have been keeping returns on cash in government securities pretty low. And I wonder if that continues and if that, in the end, is the big thing that drives appetite for stocks right now, Chris. Are we going to see continued appetite for stocks, despite all the good arguments about valuation and questions raised about whether it continues? Is it a sort of no alternative argument that keeps demand for stocks looking good?
Yeah, I think the no alternative argument is still a very powerful one. And, we've got a very, very strong earnings backdrop at the moment. Like everything else we've alluded to, we're probably at a short-term high point, but nevertheless, the tide is rising. And the adjustments we've seen so far in bond yields have been actually, pretty small in comparison to that. We've just heard from the Fed again, no surprise. They're not in a rush to raise interest rates. So actually what the Fed is saying to you, maybe they just said, Jay Powell has just said it right out, clear, there's no hidden agenda here. He said, we're going to wait until we see inflation before we raise rates. Now, in the old days, we used to call that the Fed falling behind the curve. And they've actually just said, we are going to let ourselves fall behind the curve. So what that means is shorter rates for longer, but it does mean that further out, they will raise rates having fallen behind the curve, and they'll have to do it more aggressively. So that actually tells you that actually means that the steepening of the yield curve reflecting those higher long-term rates, I think, will reassert itself in the coming months after the short-term check, which we've had in the last month or two. And I think it still means that the time being, equities, we should expect a bit more volatility. We can't expect a one-way street. But those earnings yields from equities are still the best return on investment available to you.